Just to go a little further on the demand and supply principle, which helps in the price discovery. Stock prices change every day as a result of market forces. Market forces being the guys who are buying the demand side and the guys who are selling the supply side. So by this, we mean that share prices changes because of supply and demand. If more people want to buy a stock, then demand is up, then people who wants to sell it, supply, the price will move up. Conversely, if more people want to sell a share than buy it, then the price would go down. It's the same thing as in the vegetable market, where if there's more people selling tomatoes, the price of tomatoes will come down because there's hell of a lot of supply for it. But when there's very few people who are selling tomatoes and there are a lot of people who wants to buy those tomatoes, the price of each tomato that is being sold in that market will go up. That's the principle that moves share prices in the stock market. And just a little bit of trivia for you. What we call truth is that nobody really knows for sure. Some people believe that it is impossible to predict how stock prices will change, while others think that by drawing charts or looking at price movement, they will be able to determine what a share should be selling at. But in actual fact, no one really can truly determine what a price will be, other than the forces which dictate the market, like supply and demand. So if you understand that point, you're halfway understanding what the investment world is about. Type of asset classes. Asset classes are the products that you can buy when you invest in the market. We call them asset classes. And in simplicity, it's already information that you are aware of, maybe consciously or not consciously. The first type of asset class that is very popular in the stock market is equities. Another name for equities is shares, as I mentioned in the previous slide. Shares or stock or security. Those are equities. Those are pieces of companies that you can buy, that you will own, and you will be receiving a dividend on it, or capital appreciation, or you'll get voting rights. You'll get privileges of owning that piece of company in the form of shares. Second asset class that is also mostly traded in the stock markets is bonds, are fixed interest instruments. For an example, when government is looking to raise debt, they would use government bonds to borrow money. And if you as an investor borrows government money, they will pay you an interest either annually or semi-annually. So you will be receiving a fixed interest income on borrowing money to the government through a government bond instrument. Another asset class that is also very popular within the market is properties. We will mostly be talking or dealing with listed property. That's the property that those are property companies that are participating either in the commercial property, like for example, shopping complexes, or industrial properties, for example, warehouses, or residential campus properties, for example, estates and complexes that people live in. You can invest in listed property through the market. Another asset class is commodities. In simplicity, commodities are well traded all over the world. They are one of the first instruments to be traded in the market. For example, in the market you can find price of gold on a daily basis, price of silver, price of corn, price of platinum. That asset class is a highly traded asset class. You can get access to it if you invest in the stock market. And another type of asset class is cash. Cash that sits in the bank, that perhaps all of you would know.